Where things did start to shift a little bit was the Fed did lower their projections for GDP and lifted their expectations for inflation. Good afternoon. So if you have the day off here today, I hope you're enjoying the holiday. We have a lot to cover with the Fed really changing their projections and kind of sharing what they are watching ahead as the main theme of our conversation for this week's market update. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And every Thursday, we aim to kind of break down the market news, the data, the trends, hopefully weed out a bit of the noise along the way. And again, this week, we're going to primarily focus on the Fed decision and Fed press conference that came to follow just yesterday on Wednesday. Before we get to that, though, there is one data point that I wanted to highlight. So I think it was Monday, actually, sorry. On Monday, we had retail sales numbers come out, and retail sales were actually down 0.9%, which was quite a bit further down off expectations than many had anticipated. So again, down 0.9%. Now, obviously, we'll continue to watch this as time goes on, but this is really important because this kind of speaks to the consumer in a way, and the consumer is a big, big part of our economy, as you might imagine, and as you've probably heard me share before. Remember that today markets are closed for the holiday, but they will be open again tomorrow on Friday. And then let's spend most of our time here today on the big news, which is the Fed decision and the press conference that followed. So the short version of things, and then we'll kind of drill in a bit, is as far as the decision goes, there were basically no changes in rates. Probably no surprise there. I think most had anticipated that rates would remain the same. That is the case officially after yesterday's decision. We also, if you look in between the lines a little bit, we had two more members that expected cuts ahead. But in general, the expectation is still 2 rate cuts expected through the end of the year, or 50 basis points, 0.5%, in other words, lower rates by the end of the year here in 2025. But where things did start to shift a little bit was the Fed did lower their projections for GDP and lifted their expectations for inflation. So we basically saw the Fed increase inflation expectations on the core side of inflation to 3.1%. and then decrease the GDP expectations to 1.4% for 2025. Now, this is going to be a theme, so keep what I'm about to say here in mind as we wrap up this Fed press conference conversation. Again, Fed lifted inflation expectations, lowered GDP expectations. Now, the reason I'm highlighting that again is because even though the data is suggesting slower inflation, the Fed is kind of suggesting that they still expect that we'll see inflation picking up down the road. And, this will kind of tie into some of the press conference and ultimately what he had shared they're really viewing as they look ahead. So, quick summary version of the press conference, quite honestly, was that it was almost a replay of what we heard last meeting. There really wasn't a whole lot of new information from this conversation. There was a lot of kicking the can, a lot of we will wait and see the data, but maybe a few things in the nuances that I did want to touch on. They say that the uncertainty around the outlook has diminished, but is still unclear. I do find this a bit interesting because, obviously the expectations have been pretty wrong in the past. And so what we're seeing is we see data suggesting the opposite of their expectations, which of course happened back during the inflationary period we did see when they mentioned it was transitory. Now, time will tell, and we will obviously see where inflation does go, but I think that the good news is that there was a degree of humility with this, of saying, we will wait and see. We're going to see what the data brings. And so they do plan to continue to see where this goes and aren't necessarily hanging their hats too much on their projections, although I will come back to that. One thing that was very interesting that I think is the first time it's really been addressed this directly. You guys have heard us talk a little bit about this as well, but the reality is that rates are still relatively low in historical context. Now, we are so used to interest rates from just a few years back that were basically on the floor that these rates do feel higher. But the reality is, if you look back further, this really isn't a significant rate level that we're kind of living at the moment. Obviously, lower rates are great, especially for mortgages and all the above, business loans, you name it, sparks a lot of activity. But generally, if we zoom out further, again, these rates aren't really all that high. And he had also mentioned that policy is, he used the word modestly restrictive today. So basically what that means is that the way he sees it, the Fed policy would be restrictive in economic impact. In other words, trying to slow things down to a degree. But he used the word modestly, not moderately, which I know sounds tiny in difference, but he had gone out of his way to make that point. Did share that the economy and business feels like much more positive in general and constructive than just a few months ago, which is really good to hear, because obviously that's when we had the big pullback in the markets with all the tariff news. And then, honestly, it was kind of an hour or so of this general rhetoric. We will wait and see what the data gives us. And basically, they don't necessarily know what to expect, which I think is good to have that humility. That said, one thing that did come out of it, which is what I brought up earlier, is that he had said pretty specifically that if they were backward looking, that they may even be cutting rates. So in other words, if they were looking at the data at the moment, they might be in a position to actually cut rates. But because they're looking forward, they won't. And that's what I wanted to bring up earlier, because, we over the last couple of years know how many times the forecasts have been pretty wrong. Now, I will share one of the things that they've done an amazing job of is navigating all this without an official recession, which has been very impressive. But, when we go back to like the inflation of 2021 and 2022, this has been an ongoing story. And so I just hope that humility remains and decisions aren't made based on their projections. Now, to be very clear, I don't necessarily feel like they need to cut rates at the moment either. I think there's some other things to consider in the mix here. And I think the wait and see policy is good. But I thought it was very interesting to hear them say that if they were looking at data looking backwards, they would cut, but because they're forward looking, they won't, which basically means based on their assumptions of what could come, they don't want to cut rates yet. So we'll remain, kind of in the dark here on this of what's to come. Obviously, again, the general theme is that we might see 2 rate cuts by the end of the year. But as time goes on, we'll get more and more data. And if inflation does continue to stay where we are or decrease, we could see the Fed cut rates sooner, potentially. But, obviously only time will tell. And that's really what seems to be the big thing. They're watching that. And of course, the labor market. But they said that they don't really see unemployment going up. So it seems to me like they're really back to watching inflation as the primary part of it. Although, of course, you've heard us share in the last couple of press conference reviews that they are watching both sides of that. And they felt like there are risks to both the inflation side of it and the labor side of it. So we'll continue to watch that. Obviously, those data points will remain very important as we watch for markets ahead and how that translates to Fed policy moving forward. As a quick recap of what we saw in the markets as a result of all this, we basically saw as the Fed announced the no change in rates and then jumped into the press conference, we basically saw stocks pull back slightly. We saw interest rates on bonds increase slightly. The dollar grew stronger, leading to kind of a slight drop in gold prices. And then we saw slight increases in oil prices as well. But all of that said, even in all of these different asset classes, the fluctuations or the changes were pretty muted, in all honesty, mostly because I don't think this was much of a surprise to anybody or to the markets in general. So hopefully that's helpful as a quick recap. Be sure to tune in next week. Again, we do have a split week this week. So markets are closed today on Thursday. They will be opening again on Friday. And then we're back to a full week next week. But basically next Thursday, we'll be covering leading economic indicators and then some consumer data that we receive next week. In the meantime, enjoy the rest of your holiday. Enjoy the upcoming weekend. And we'll see you next Thursday at 3.